Hey there, Albert Stepniak, your friendly little real estate agent here in South Florida. So let's talk about what's happening in the housing market. National Association of Realtors, or NAR for short, just put out some new information about how many homes were put under contract in July. Think of a pending sale as a house that's been picked out, and the buyer and seller have signed a contract, but the deal isn't officially done yet. It's kind of like an early look at what sales are going to close in the next month or two. What they found for July is that the number of pending sales across the country went down just a little bit from June by about 0.4%. But when you compare this July to July of last year, we actually saw a small increase of 0.7%. It's a mixed bag, really. The report also gave us a look at what's happening in different parts of the country. In the Northeast and Midwest, for example, the number of pending sales dropped from the month before. Meanwhile, the West saw a nice increase in sales, and the South stayed pretty steady. Looking at the bigger picture, the Midwest and South have more pending sales than they did a year ago, while the Northeast and West have fewer. So, why are things a little slow? Even though things like mortgage rates and the number of homes for sale have gotten a little better, people are still being careful. Buying a house is a huge decision, probably the biggest one most of us will ever make. Because of that, buyers are taking their time to make sure everything is just right before they sign on the dotted line. This is a good thing. It means people are being thoughtful and not rushing into something that isn't a good fit. The report also pointed to some encouraging signs for the future. You know how people apply for mortgages before they buy a house, right? Well, those applications are actually on the rise. This suggests that more people are getting serious about buying, even if they haven't found their perfect house yet. Plus, there is a feeling that the Federal Reserve might lower interest rates in the coming months. If that happens, it will likely make things more affordable for buyers and bring more people into the market. So while things are a little slow right now, it seems like we could see things pick up soon. If you've been wondering what's happening with the home prices, here's a quick and simple breakdown. The latest report from the Federal Housing Finance Agency shows that overall, home prices in the US went up by about 2.9% over the past year. Now, if we look at just the last 3 months, from spring to summer, prices pretty much stayed the same. It's interesting to note that this marks over a decade of consistent yearly growth for the housing market since 2012. Looking at things more closely, almost every state saw prices go up over the last year. In fact, 46 states saw a price increase. Places like New York, Connecticut, and New Jersey led the way with some of the biggest jumps, each seeing gains of more than 7%. On the flip side, a few places actually saw price drop, including Florida, where they went down just a bit, and the District of Columbia, which saw the biggest drop of all. If we zoom in even further to specific cities, most of the 100 largest metro areas also saw prices rise. The biggest jump happened in Rochester, New York, with a more than 10% increase. However, the Northport, Bradenton, and Sarasota area in Florida saw a significant drop. These price changes tell us that while the big picture shows overall growth, what's happening in your specific neighborhood might be a little different. As a real estate agent, I'm always keeping an eye on the market, and that's not just about home prices. It's about how people are feeling about the economy as a whole, which we call consumer confidence. Recently, a new report came out showing that in August, Americans were just a little less optimistic than they were the month before. It wasn't a huge drop, but it's a trend we're watching. A couple of things seem to be on people's minds right now. The first is a growing worry about the job market. This isn't a new concern. It's something people have been feeling for a while now. The other big thing is inflation, or just the rising cost of things in general. When these two concerns pop up, it can make people feel a little more cautious with their money. In fact, the Conference Board's report noted that more people are starting to wonder if a recession could be on the horizon. So, what does this mean for big purchases? Well, the report showed that fewer people are planning to buy things like appliances or go on a vacation. But when it comes to the housing market, things are holding steady. The number of people who said they still plan to buy a home didn't really change from July to August. This tells us that even with some economic uncertainty, the desire to own a home remains strong. Now let's talk a little bit about what's going on with mortgages. I know it all can sound a bit confusing, but the big news is that the average rate for a 30-year mortgage just dropped a little bit. It's now at its lowest point in about 10 months. So it went from 6.58% last week down to 6.56%. Now, I know that might not sound like a huge change, but it's a good sign for anyone hoping to buy a house. Now, you might also hear about 15-year mortgages. Those are usually popular with people who already own a home and are looking to refinance. The rate on those didn't change at all, staying right at 5.69%. You've probably heard that the housing market has been pretty slow lately. A lot of that has to do with how high mortgage rates have been. They started climbing in 2022 and have been pretty high since then, hovering around 7% for a while this year. But for the last 6 weeks, we've actually seen them slowly inching their way down. This recent drop is really encouraging for people who have been wanting to buy a home, but were waiting for a better deal on the loan. We haven't seen this translate into a big jump in home sales just yet, but it's a step in the right direction. It's definitely something to keep an eye on if you're thinking about buying or selling. So, you might have heard some talk lately about the Federal Reserve possibly cutting interest rates. A lot of people wonder if that means mortgage rates will automatically go down, and they want to know if it's finally a good time to buy a house. It's a really good question, and the answer isn't as simple as you might think. While the Federal Reserve does set a key interest rate, that's not the one that directly controls what you pay on a 30-year mortgage. The Fed's rate is actually a very short-term rate that banks use to lend to each other. The rates on home loans are more closely tied to something called long-term treasury yields, like the 10-year treasury note. Now, when the Fed cuts its rate, it can sometimes put pressure on these longer-term rates to go down, but it's not a direct or instant change. It's more of like an indirect connection. Think of it this way. The market has been expecting a rate cut for a while now. All that expectation is already priced into the current mortgage rates. So even if the Fed does make a cut, you might not see a big immediate drop in mortgage rates. The change could be small, or they might not be one at all, or at least not right away. And there is another thing to remember. Even if mortgage rates do come down, that doesn't fix everything. Home prices are still pretty high, and many people are still holding back because they're worried about the economy in general. So while the rate cut would be welcome news, it's not a magic fix for the entire housing market. Well, when it comes to the real estate market for new homes, things have been a bit slow lately. It's really all about affordability. High mortgage rates and the rising costs to build a house are making it tough for people to buy. So, What's happening is that sales of newly built single-family homes have barely moved. They actually dipped a little bit in July, and when you look at the whole year, new home sales are down over 8% compared to last year. This is a big deal because when fewer people can afford to buy, the homes that are built sit on the market longer. This is leading to a growing supply of unsold homes. Most of the new homes being built are pretty pricey. The majority of them are selling for somewhere between $300,000 and $500,000. On the lower end, you'll find that only about 17% of new homes are priced below $300,000, while a larger number, about 31%, are going for over $500,000. The reason for these high prices is a combination of things: high interest rates, a shortage of skilled workers, and expensive building materials. Builders are facing a lot of pressure to keep their costs down. Since it's getting harder to sell homes at these high prices, builders are getting creative. To get buyers to the closing table, they're using more incentives. For example, a builder might offer to pay for a portion of the buyer's closing costs or help them get a lower interest rate on their loan. This is actually a big reason why the median price of a new home has dropped by almost 6% from a year ago. It's not that the homes themselves are getting cheaper to build. It's just that builders are giving away some money to make a sale happen. With sales slowing down, the number of new homes for sale is going up. We now have about a 9.2-month supply of homes on the market, which is a lot higher than the 7.9-month supply we had a year ago. When this number is high, it generally means it's a buyer's market because buyers have more options and leverage. The number of completed move-in ready homes is also at its highest level since 2009. This trend of slowing sales isn't just in one area either. Every region in the country saw a drop in new home sales this year. The biggest drop was in the Northeast, but even the South, which is the largest market, saw a slight decrease. Buying a home today is a lot different than it was a generation ago, and it's getting tougher for younger folks. For a long time, homeownership was seen as a key part of the American dream, but for many, especially those under 30, it feels like that dream is slipping away. A recent survey from Pew found that almost 70% of people over 65 believe that dream is still possible. But for those under 30, that number drops to just 39%. A big reason for this is the housing market itself. It's been a long time in the making. After the Great Recession, home construction slowed down big time, which created a shortage that we are still dealing with. On top of that, home prices were already going up faster than people's salaries. Then, when the pandemic hit, super low mortgage rates caused a frenzy. Buyers were in bidding wars and prices shot through the roof. Investors also started buying up properties, which made the supply even tighter and pushed prices even higher. Things have calmed down a bit since then, but it's still tough. Mortgage rates are higher now, and many homeowners who got low rates aren't selling, which means there are fewer houses on the market. Prices, meanwhile, just keep going up. So, what does this new reality look like? Well, for one, home buyers are getting older. Back in the 1980s, a typical home buyer was in their early 30s. Today, that age has jumped to 56, which is a record high. Baby boomers now make up the largest group of home buyers, not millennials, even though there are more millennials in the population. The way they're buying is also very different. About half of older boomers are paying for their homes with all cash, avoiding a mortgage altogether. On the other hand, almost all millennials are getting a loan, and many are getting help with their down payments from family and friends. This shows a big difference in who has the cash and who's competing for homes. Another major change is the number of first-time buyers. It's a lot easier to buy a home when you already own one and have built up equity. Today's market often pits homeowners with equity against younger buyers trying to get their foot in the door. The share of first-time buyers has dropped to a record low of just 24%. Before 2008, it was typically around 40%. This is a big deal because for many people, owning a home is the main way to build wealth. Then there's the money side of things. Home prices have gone way up, but wages haven't kept up. Since 1984, the price of a new home has gone up more than 400%, while the median household income has only gone up about 260%. This means that a home today costs a lot more compared to what people are earning. For a long time, buying a home was a much more straightforward process, but today you need a much higher income to afford the same kind of property. Lastly, you are not just competing with other families. You're also competing with big-time investors. In 2001, investors only made up 2% of home buyers, but today that number is more than 13%. They're buying hundreds of thousands of homes each year, and most of them are paying with cash. This puts regular people at a huge disadvantage, especially when they're looking for more affordable homes. It's just another hurdle that wasn't there in the same way for previous generations. When it comes to buying a home, it's pretty clear that baby boomers and millennials have different priorities. But what exactly are they looking for? Turns out they're often hunting in the same neighborhoods, but they want very different things. Let's start with the size. While both generations are moving away from huge houses, they're doing it for different reasons. Boomers are often downsizing, but not downgrading. They want a smaller home, but they want it to have high-end finishes. They're more likely to look for single-family homes, or at least one that has a main bedroom on the first floor. They're basically looking for a home that's easier to maintain. On the flip side, millennials are looking for efficient, compact spaces that get the most out of every square foot. They're more likely to be okay with a smaller space if the layout is open and the space is used well, because they want to keep their costs down. The way these two generations think about layouts is also very different. Boomers are more drawn to traditional layouts with separate rooms. They generally know exactly what they want, and it's a home with classic design choices that will feel timeless. Meanwhile, millennials prefer open floor plans and rooms that have multiple uses. They value flexibility, especially since many of them work from home. For them, a good home office is just as important as a great kitchen. When it comes to picking a location, boomers tend to seek out quiet, more suburban or even rural neighborhoods. They're looking for peaceful streets in familiar areas, or even communities that offer amenities like a resort. Millennials, however, are all about living in walkable areas with easy access to restaurants, parks, and public transportation. Their ideal location is somewhere in the middle, not quite downtown, but not out in the suburbs either. It's a place where they can walk to a coffee shop but still have a backyard. Another difference is what they think about technology. For boomers, it's about making their lives easier with things like smart doorbells and voice assistants. On the other hand, millennials expect smart home features to be standard. They want their homes to feel like an extension of their phones, with things like smart thermostats and app-controlled lighting. They're all about convenience and control, and they have a more futuristic vision of how their home should function. Finally, the biggest difference between boomers and millennials is how they view a home. Boomers see a home as a long-term investment. They prioritize resale value and features that will hold their worth. They tend to choose neutral colors and classic layouts because they are already thinking about their next sale. Millennials, however, see their homes as a lifestyle statement. They're more willing to sacrifice some resale potential for a home that fits their current needs. They'll paint accent walls or install unique light features because the home has to work for their life right now. They're more likely to take on a fixer-upper, while boomers often prefer a new, move-in-ready property to avoid renovation headaches. It's clear these two generations are shaping today's housing market in very different ways. And it's important to understand what each one is looking for. So, whether you're a first-time homebuyer or looking to sell your Florida property, remember this: the right information, the clear plan are your biggest assets. My goal with this channel is to empower you with that knowledge. Real estate is more than just transactions. It's about building your future. If you have any questions about today's topic or your unique situation, drop a comment below or send me a message. I'm here to serve as your local real estate resource. Thanks for watching, and I look forward to connecting with you soon.